Good afternoon, everybody. We're just going to give people a few seconds to come in while the room calms down a little bit, and then we will get started. As we always say, it's great for you to have your cameras on if you would like to be on. We like things to be as interactive as possible. We like to be able to see people, but understand if some of you can't for whatever reason. I'm going to get started if that's okay. People are still coming in, but right. Good afternoon, everybody. My name is Richard Ayres, and I'm a social care advisor at Care England, and I want to welcome you to today's webinar titled Joint and Several Liability Explained, Avoiding Unexpected HMRC Tax Exposure for Care Providers. So in today's session, we're going to explore how care providers can better understand and manage the growing issue of joint and several liability. Now, across health and social care, many organisations rely on agencies, umbrella companies and outsourced workforce models to deliver services. What providers may not always realise is that in certain circumstances, HMRC can pursue them for unpaid tax liability. And that's even if the organisation in the supply chain was responsible, if another organisation in the supply chain was responsible for the tax deductions. So with increasing and evolving types of use of temporary staffing and complex labour supply chains, this may create a potential financial and compliance risk for care providers. So in this session, we want to really explain how joint and several liability works, when HMRC may apply it, and the practical steps organisations can take to protect themselves through stronger due diligence and workforce compliance. Now, one thing I just wanted to kind of point out there is that we have lots of providers tell us that agency is not really an issue for them currently at the moment. Spend is at its lowest levels that it has been for the last 5 years. Data that we have provided to us on a quarterly basis shows that there's a slight uptick, mainly due to international recruitment and the growing number of domestic recruitment vacancies. We've seen a slight uptick in the last quarter, and that doesn't suggest a trend yet. But it is at equivalent levels to pre-pandemic, and because we've had higher peaks of agency, now it's dropped again. Providers seem to have a bit of a breath of relief. However, if we remember, to those who are around pre-pandemic levels, agency was at very high levels, and it was a real area of concern. So we do need to make sure that we are really understanding agency, and we're making sure that those efficiencies that we put in place are compliant from a tax perspective. So today's format will consist of myself covering a bit of basic housekeeping, after which I shall introduce Patrick Curtis, who is legal counsel at Neuven, and he will introduce himself shortly and talk for around sort of 30-35 minutes, after which I will moderate a Q&A session. Now, when Patrick is talking, you are free to use the chat function to raise any questions that you may want to put to Patrick, and I will ask those in the Q&A section. Alternatively, I'll drop my email address into the chat if you prefer to ask your questions anonymously, and then I will raise them on your behalf. So we always ask that you keep yourself muted during the presentation, but we do love to see cameras on because it's more engaging. And then after Patrick has finished, as I said, I will facilitate a Q&A session where you can raise your hand and ask Patrick questions directly. So now we are recording the session, and our intention is, as always, to note any unanswered questions and to send an FAQ plus a copy of the recording and any slides after the event, along with any contact details should you wish to reach out to Patrick or Ian directly. And we aim to send that out usually before Friday. So without further ado, please let me hand over to Patrick, who will introduce himself formally and start things off. Patrick.
Thank you, Richard. Yes, so my name is Patrick Curtis. I am legal counsel at Neuven Solutions. I was a private practice lawyer for about 20 years before moving in-house. I have been with Neuven now for coming up to 3 years as their legal counsel. For those of you who don't know, Neuven Solutions is a neutral vendor. We assist clients with the provision of and management of their temporary labour needs. So without further ado, I will get into this presentation because that is the meat and drink of what you are here for. So just a quick overview of what I intend to cover on this topic. We'll start with a quick history of umbrella companies and a quick account of why the law is changing again, to put things into perspective for you all. The main body of that will then, the presentation will then be how the law is changing and what some of the key definitions are and what they mean, so that attendees can understand how the risk presented by this new legislation will apply to them. I'm going to touch briefly on joint and several liability and the nursing concession, because I think the interaction of those two provisions are important for this audience. And then finally, I will wrap up by talking a little bit about what I think a proportionate response should be for various categories of people affected by these issues. So if I talk a little bit about umbrella companies, prior to 2007, there was a surge, or around 2007, there was a surge in self-employed contractors. And that was driven by tax efficiencies in the noughties of being self-employed rather than employed in some way. And that led to these self-employed contractors were working via their own limited companies. And that led to a proliferation of businesses who offered services to manage company administration for these self-employed contractors, to handle the admin of having a company on Companies House, and also dealing with the accounts and the tax side of that. And these businesses became known as umbrella companies. In 2007, the government changed the law because it was unhappy with the efficiency, with the tax efficiency with which this was being done, and were concerned that these self-employed contractors and umbrella companies were leading to deficit in tax take. And what they did was introduce the Managed Services Company legislation, which transferred the debt for missing tax from the self-employed contractors, personal service companies, and onto the umbrella companies. And that changed the sector overnight. Frankly, everybody thought umbrella companies would go the way of the dodo and the dinosaur and just disappear. But in fact, what happened was the umbrella companies shifted their focus onto a tax relief that you may recall, which was travel and subsistence tax relief. And what they did was they moved on to employing temporary labour on 3 to 6 hours overarching contracts of employment to take advantage of this tax relief. And that was all well and good until 2016, when again HMRC became concerned that its tax losses were too great, and it ended travel and subsistence tax relief. And since then, what umbrella companies have largely have supposed to have focused upon is outsourcing payroll functions, employing the workers, and therefore from an agency point of view, they would outsource the employment liabilities to the umbrella companies. They also frankly produce some credit, which is a form of financing for employment agencies. And they reduce the administrative burden on agencies for running a business, which all sounds perfectly innocuous and might obviously lead to the question, well, why is the law changing again? Well, again, HMRC became concerned towards late 2010s and early 2020s, again around tax take from umbrella companies. And their analysis showed that certainly for the period 2022-2023, there were 700,000 umbrella companies, of whom 275,000 were not having their tax correctly accounted for, and that was causing tax losses of circa £500 million a year. And this, I have to say, was probably not administrative incompetence. I think, as everybody knows, umbrella companies have been in recent years pushing some very aggressive tax planning treatments. I say very aggressive. HMRC would say somewhere between tax avoidance and tax evasion. And this got to a level, I think, where HMRC was clearly prepared to move to end this tax loss. And it looked at a number of different ways to do this, including licensing umbrella companies, banning umbrella companies, just moving the obligation to pay the PAYE and NI further up the supply chain. But what it settled on as a route for dealing with the issue was joint and several liability. And that will come into force, that legislation will come into force on the 6th of April. And as I say on the slide, HMRC estimates that it will generate an additional £2.8 billion in tax revenue between, well, actually it's backdated slightly, between last year and 2031. Sorry, let me just move my slide forward. So what are HMRC doing? Well, with effect from the 6th of April of this year, a relevant party, and I will talk about what a relevant party is in due course, will become jointly and severally liable with an umbrella company for the payment of PAY and NI liabilities for umbrella company employees. Joint and several liability, for those who don't know, is a legal concept whereby one or more parties can be primarily liable for the same debt. So you typically see it in things like sale and purchase of companies, where one or more parties, if there are, say, 4 sellers of a company, the buyer will usually say all 4 are jointly and severally liable for any warranty claim for the full amount. That means it can pick and choose who it wants to go after to recover the full amount of any sum it's owed. And what the government has taken is this idea and applied it to tax. This is coming in the new Chapter 11 of the Income Taxes, Earnings and Pensions Act, and effectively is being introduced to make it easier for HMRC to recover tax liabilities from parties in labour supply chains, other than the employer, where it is either unable to make a recovery or is struggling to make a recovery. I think it's important to say it does not have to have failed. There is no obligation for it to have exhausted its possibilities with the employer. It just has to, the debt simply has to exist, and you have to be either the employer or a relevant party. So this is the first, well, it's all important. This is the first and probably most important slide for people to understand here, because up to now I've been talking about umbrella companies as we talk about them within the industry. It's a company further down the supply chain that employs workers and runs admin for agencies. If you only take one thing away from this presentation, please take away this, that is not what the government means and not what HMRC means when it defines an umbrella company for the purposes of joint and several liability. For the purposes of joint and several liability, an umbrella company is any company which employs a worker to personally provide services to a client, and it must meet all these criteria. It must carry on the business of supplying labour. It is not a company in which the worker has a material interest. I'll come back to that point in exceptions, so don't get overly hung up about that now. And it meets the umbrella company arrangement conditions, and that is that there is a contract between the employing business and the client, and under that contract, either the services of the worker are provided or the business is paid for the services. Once you meet those criteria, you are an umbrella company for the purpose of this legislation. And we have seen some confusion in the market about what this means, with people referring to HMRC talking about umbrella companies. What I want to clarify is this is what HMRC means when it's talking about umbrella companies in respect to joint and several liability. So it is a broad definition. It will capture far more than what is meant by an umbrella company when that word is used in the industry. Principally, of course, it will capture employment businesses if they employ temporary workers. It would capture employers of record, agencies, consultancies who offer hire, train and deploy models, any of those. But I think for the purpose of this audience, not only is what we talk about as an umbrella company for the purpose of this legislation, but so are, or potentially so are, all employment agencies. And that, I think, is poorly understood still, and was practically non-existently understood as late as kind of November, December of last year. So that is an umbrella company. That is the company that creates risk in the supply chain. So the second question we have to ask ourselves is, what is a relevant party? Because the relevant party is the party that is jointly and severally liable. So if the umbrella company has a direct contract with the end client, then the end client is the relevant party. I.e., if your supply chain is, I use an employment agency and there are no other companies in the supply chain, then I, the client, am the relevant party. If the supply chain is longer than that, i.e., there are companies below the employment agency that employ the workers, then it is the employment agency or the business with the contract with the end client that is the relevant party. So if the supply chain is an umbrella company, an employment agency, and the client, then the employment agency is the relevant party. Now, there are some exceptions around, sorry, not some exceptions, but anti-avoidance provisions, forgive me, around two things. One, where you have groups of companies, and where companies are grouped together, i.e., say you have an employment agency that forms part of a group of companies, and actually it has one company in its group that employs all its workers, then the end client is still the relevant party. The legislation treats the group of companies as if it is a single entity. And then there are some provisions around offshoring the intermediary chain. It's the first company in the UK that meets its definition that will be the relevant party. I think that's been done because a lot of the issues that I think have led to this is around what you might have heard of mini umbrella fraud or mini umbrella structures that were deliberately offshored to make it difficult for HMRC to seek recovery. So it's basically saying we don't care about that. We'll look at the chain, and the first party in the UK, they will be the relevant party. So umbrella company is the company that employs the temporary worker. That is obviously liable to pay PAYE and NI. Anybody who meets the definition of a relevant party also liable to pay that PAYE and NI. So I said a few minutes ago that when we were looking at workers who have a material interest in their company as an exception, there are some exceptions to what this legislation applies to. The biggest one is it applies to Chapter 11 tax, and Chapter 11 is paid in respect of employees. Now, a lot of people employed by employment agencies are on contracts for services, not contracts of employment, and they pay their tax under Chapter 7 of ITPA, and that has its own completely separate provisions around where liability lies for unpaid tax. It does not extend to clients. It basically moves the liability to the employment agency. So if a worker is on a contract of services and not a contract of employment, this legislation that we're talking about here does not apply. And people who are genuinely self-employed, I have a personal service company, which they own more than 5% of is the material threshold. If they are genuinely self-employed, then the IR35 rules apply in the usual way, and that is not an umbrella company for the purposes of Chapter 11. So those are probably the two key exclusions for this. Of those, I think looking at the data that's available to us, the bigger category will be workers on contracts for services, because most companies in our experience have largely stopped using personal service companies because of IR35. And we'll come back to that briefly again, because it is one of the possible responses in industry that we may see an uptick in the use of personal service companies. So what's the sum total of this information then? So HMRC can pursue relevant parties for PAYE. And the important phrase there is not just underpayments. The only thing that matters is that there is Chapter 11 PAYE and NI, and it hasn't been paid. And if you are either the umbrella company or the relevant party, HMRC can effectively pursue whoever it wants to recover that tax. This is a strict liability offence. It's not like some of the issues that we've been dealing with in the industry recently around, say, mini umbrella fraud, where there is a fault element and there are reasonable steps that a party can take to defend itself. As long as the debt exists and you are a relevant party, you are liable for it. HMRC has, I think unsurprisingly, clarified in its presentations on this that it will seek to recover the money first from an umbrella company, but it's been equally clear that it will not only use this legislation where it is unable to make a recovery, i.e. that the umbrella company has gone bust, merely if it is not being paid rapidly enough for its own satisfaction, then it will look to relevant parties for the tax. And of course, we have to think about it, given that it's a strict liability offence, why an umbrella company might not have paid its tax. And we're all familiar with tax avoidance models and deliberate non-payment. I think this is where I would distinguish risk here, which is that most tax avoidance models that we've seen and come across have been in umbrella companies, as we traditionally use the term, not in employment agencies. So I think if you are using employment agencies, risk of tax avoidance is lower. But of course, that still leaves at least two other headings: either professional negligence, just making a mistake in your tax calculation, or probably more critically, insolvency. I think the government data suggests about 4% of agencies will become insolvent in any given year. And it is not a favourable cash flow model. You pay salaries weekly and you collect 30, 60, 90 days later. So it's not the most solvent cash flow model that you can think of. And when we had a look at this, agencies who became insolvent tended to owe 3 to 4 months worth of unpaid PAYE and NI, and similar in VAT, suggesting that actually in many cases the primary cause of the insolvency was HMRC losing patience rather than anything else. HMRC is classically a stretched creditor when a company is getting into financial difficulty. So I think all of these are causes for concern. And as I say, there is no defence. There is nothing that you can do that would stop HMRC being able to move against a relevant party to recover sums. So I said earlier that we would take a look at joint and several liability and the nursing concession because of the interaction of those two things. And I'm sure most of you are familiar with the nursing concession. Of course, it's an extra statutory concession allowing nursing staff supplied by agencies to be treated as VAT exempt. And the key for our purposes in talking about joint and several liability is that the agency must supply the staff directly to the healthcare provider, i.e. there can be no further company in the supply chain. or if there is, that company has to charge VAT to the agency, and then the agency has to charge the VAT, and the purpose of the concession is defeated. And so for healthcare businesses, and this is not true for most other industries, we'll always have a category of staff for whom there is a high likelihood that they are directly employed by the agency supplying the client, and therefore the healthcare provider will be the relevant party. In other industries, that is not the case. It would be possible to mandate the use of companies further down the supply chain, umbrella companies as we traditionally call them, and therefore the relevant party becomes the employment agency, and the end client is potentially out with the legislation and not liable. This is not possible for healthcare providers who are taking advantage of the nursing concession. So I think when you look at risk as a healthcare provider, there is an extra layer of consideration that we need to run through. So that's a summary of the legal position. And of course, I'm aware as I say it that it all looks pretty bleak, particularly from a kind of strict liability point of view and the scope of things which you need to consider. So what do I think that a practical response to these issues would be? I think first, and it slightly worries me to say it, but I feel I ought to, given our understanding of how well this is understood in the market, I think people should ensure their board has a proper understanding of the legislative changes and has a proper understanding of the exposure of their business to temporary labour, PAYE and NI. As I said earlier, at a simple basis, you take your spend on temporary labour and you assume 20% of it should end up in the hands of HMRC. And that is kind of a headline figure each year for how much tax you're paying. How you work down from there, I think, depends on what level of granularity of an understanding of your supply chain you have and how you analyse that risk. The other standard piece of advice that is obviously out there at the moment is reduce the number of suppliers that you're using. When we looked at our own supplier base and our clients' suppliers, it is hugely Pareto. There are a small number of agencies doing the vast majority of supply, and then a very long tail of agencies picking up bits. All I can say about this with any degree of certainty is that the larger your supplier base and the less you know about their own suppliers, the more likely you are to end up in that beginning world where I said 40% of umbrella employees are not paying their taxes correctly. The more you expose yourself to that, the more it just becomes statistically inevitable. And yes, by having a larger supplier base, any individual thing going wrong reduces the quantum of the damage. Effectively, it's death by 1,000 cuts rather than death by one large cut. And certainly one cut is easier to mitigate. If you have a smaller panel, you can police it more effectively. You can have a closer relationship with your suppliers, and that will to some extent mitigate your risk. The next point I think is very important, which is, although I've talked about how conducting due diligence and taking steps to mitigate this risk is not effective in HMRC's eyes, and it isn't under this legislation, it is actually counterintuitively more important, because effectively what HMRC are doing is pushing onto private organisations the policing of the payment of tax. The only reasonable defence to this, if you are going to use temporary labour, is to have a very, very high certainty that all the tax associated with that labour, certainly all the PAYE and NI, is being correctly calculated and is being paid to HMRC on an ongoing basis. That's why I use the phrase monitoring as well as due diligence. I think it's a step beyond due diligence. Traditionally, you would due diligence a supplier at onboarding, and then you might sporadically do further due diligence during the life of the relationship you have with them. I think in this case, it's more than that. It is active monitoring, probably on a monthly, certainly no less than a quarterly basis, to know that the tax is being accounted for and know that the supplier is financially sound. Because I don't see any other way in which you can be certain that your risk is being effectively mitigated. And that combined with smaller PSLs, I think that is my overarching advice to anybody affected by this. And the final one I feel compelled to say, because I have Ian on the call, who's my salesman, is to say, come to us. We have this all covered. I spent 6 months of my life looking at this problem and attempting to resolve it satisfactorily. And indeed, I am satisfied that there are solutions out there that we have been able to utilize that will give a very high degree of security to anybody procuring their temporary labor through us. Richard, I hope I've hit my timings more or less there, and that you can pick up the Q&A.
You've done extremely well. If I could actually take the slides down, that'd be great. Thank you. You can just, that's it, brilliant. Thank you very, very much, Patrick. I mean, that is incredibly helpful. I think the tax takes from umbrella companies between now and 2031 at 2.8 billion is significant. So you can see why HMRC are focusing on this. And as we represent about 5% of the workforce, so I would imagine our number is quite significant. We're probably on the lower end of the pay scales, but quite significant. So I think it's only to be expected that HMRC are going to be interested. So joint and several liability and the relevant party coming into force from the 6th of April. I understood that correctly, as part of the ITEPA. That's really important to note. So we're talking the new tax year. The umbrella company definition is incredibly helpful because it's a very important distinction to understand what HMRC means by umbrella companies may be different to what we might have considered it to be. And as the relevant party, which can differ based on structure, I think that's another point. And I'm going to lead into a question that's already been coming in the chat around that. And thank you for covering the exemptions, because I think that is something we need to be very mindful of. It's a really confusing area. I think the solvency issue is very interesting as well. And we might have some more questions around that. I know Maddie has dropped something into the chat already about it. I mean, it really puts the emphasis on the kind of care provider, the ultimate organisation to conduct that sort of due diligence and monitoring monthly, quarterly, as you said, because that risk really does shine through. That fifth of expenditure is a really important liability potential, and I think boards do need to know about this because they need to make sure they've accounted for this in their risk registers, that there is a potential to carry a liability. I think you talk about that window, HMRC collecting, what they collect and how agencies are paying workers weekly, but collecting money anything up to sort of 90 days and beyond in many cases. It does mean that model is very stretched. So there is potentially, even with a good agency who you sign up with doing a great piece of work, could actually create a liability for you down the road, which you might then pick up as a related party. So that was very, very, very helpful. The other stat that I've got in my head here is you talked about potentially 40% of umbrella companies might not be paying the taxes correctly. So again, we do need to think of those. Thank you, Patrick. That's very, very helpful. Now, I am going to invite people, if you have got any questions, I have got a couple on email. If you have got any questions, please do pop them in the chat. I'm going to start with Maddie because she says, how on earth can we monitor another company? It's a great question. And I have another one very similar to that. So I'll let you respond to that one, Patrick.
So, yeah, I think that the effective monitoring will require a couple of things. One, it will require you to have a good granular understanding of your own consumption of temporary labour, because that's effectively your exposure to risk. How much temporary labour have I consumed? And then you are going to have to get the the company providing that temporary labour to share with you the payroll data that backs that up, and those two things are going to have to reconcile. You're going to have to get some degree of satisfaction that they're calculating tax correctly, and then you're going to have to effectively see that they are paying that tax over to HMRC, which you can't do in any other way other than to ask the supplier to share that information either live or as a screenshot with you to show that the tax is being paid over. So I think that, yeah, I think there's three elements of it. One is reconciling your supply to correctly done payroll and payroll taxes, and then the final bit is checking payment. I think we were discussing in the preamble, Richard, before everybody joined us, one of the things that people are going to have to look at is their contracts to see what, if any, amendments they think they should make to the contracts. Because you're right, if you don't have these rights at the moment, then you may well have to acquire those rights, and you may want to embed them in contracts to do that. I think the difficulty of this, and this is where a large organisation that specialises in coordinating temporary labour steps in, is you can effectively do it as a data merging exercise. If you're trying to do it on your own, you're right. I think it's a very challenging exercise. Again, that comes into why you should reduce your PSL. Just reduces the number of companies you're doing this with.
I think that came through very clearly. The larger your PSL, the bigger your risk is potentially. The more you've got to monitor regularly to make sure that your risks are mitigated. This is a question. This is actually a question from me, and I haven't really thought much about it. But I was thinking as you were talking, we've got the Employment Rights Act, implemented over the next kind of couple of years in various different stages, and the Fair Pay Agreement coming in 2028. That's going to give agency workers the same rights as employed workers. It's going to increase the cost of agency quite significantly because they'll have a margin for things like guaranteed hours. But is there anything that you think that's going to create additional liability out of the Employment Rights Act or Fair Pay Agreement, other than increasing financial liability?
Yes, lots. I think actually for end clients, it will express itself as increased costs of using temporary labour. I think after a period of circa 20 reasonably stable years of employment law, we're coming into a phase where it's obviously not stable at all, and I think it will push in. It'll push increased employment costs onto care providers directly, but also indirectly. Agencies will have to pick up. We know that there's changes in statutory sick pay, I think, are coming also on the 6th of April. We're looking at low hour and 0 hour contracts being guaranteed minimums. We're looking at compensation for late cancelled shifts. Day one employment rights has morphed slightly, but it will become an increasing cost pressure. And then we are seeing the real living wage and the minimum wage increasing as well. And all of those things are cost pressures on agencies. It can't be denied. And so I think the period of time in which it was possible to employ an agency worker in a way that was absolutely cheaper than having an employed worker yourself, those days are gone. I think there are reasons why you would still use temporary labour. I think there are a lot of advantages to doing it, but absolute cost is probably not one of them. While you cover this, and it's interesting, I touched upon the interaction of joint and several liability with a nursing concession. One that I would highlight slightly more tentatively, which is why I didn't put it in the body of what I was talking about, is the interaction between joint and several liability legislation and minimum hours. Now, the government hasn't said yet in detail what it intends to do with minimum hours, but one of the suggestions is that one of the things that we do understand is that it will be end clients who are responsible for guaranteeing the minimum hours, which I'm not quite sure how that will end up as being a workable proposition, but that's my current understanding of the government's intention. The way this interacts with joint and several liability is there is a suggestion that they will use the same 326-hour contract of employment as a way of governing what is and isn't a low or 0-hour contract. And I think the reaction to that by clients is likely to be to push agencies onto moving all of their staff onto 326-hour contracts of employment. Now, that, of course, will remove Chapter 7 services contract. Everybody would be moved onto a contract of employment. And all of a sudden, you're in a model where if your risk mitigation for this is to go, well, I understand that most of my supply is in contract for services, that may well end up vanishing because you're trying to solve a different problem. So I think as well as being an absolute increase in cost, we have to be alive to the fact that this is a dynamic situation. And as this legislation comes in, it affects other legislation or the risk profile of other legislation indirectly as a consequence of decisions taken in the market.
Thank you. I think that opens a lot of other questions as well, but we'll that's probably a separate webinar. Now,
yes, well,
we did have a question come in prior to the webinar, and I am going to put it to you because I think it's quite a short answer because you've covered part of it. But you talked about the due diligence and the monitoring. Is there a way to kind of get yourselves 100% protection in this situation? And the second part to that is, are the hirers, the sort of the end hirers, the clients, are they aware of these new rules, and kind of what are they saying about to employment businesses in this regard?
So, okay, if I deal with the risk, I think from a conceptual point of view, and I may be being a bit of a lawyer here, I don't think it is possible to mitigate this risk away 100%. I think that is ultimately too complex a question. I think it is possible to mitigate it down to a perfectly acceptable level, but by doing the checks that I talked about in response to the first question. If you are reconciling the information you have with the information the agency has with the information that HMRC have, then I think you're exposing yourself to really kind of 1.5 risks. The one risk is insolvency. That never goes away. Even if you were to use something like CreditSafe's highest scoring band is 75 and above, and it's a 1 in 500 chance of default in the next 12 months. So even if you are using agencies that have the highest credit scores and you're checking that you're paying the tax, there is still a residual risk that they will default on a payment. I suppose the half risk is that they make an error in calculating the tax and HMRC comes after you. I downweight that because I think any decent agency would just resolve the problem for you, or to the extent they didn't, it's a professional negligence claim and probably their liability insurance should cover that anyway. So I think and then, of course, you have to look at the model. Well, okay, what if there is poor tax behavior? What if there's outright fraud? Well, depending on how clever that is and how invisible it is, then you would have to say that possibility remains. I think it's likely very low if you're doing the checks that I'm talking about. So 100% no, comfortable enough that any pragmatic organization can put it in its risk register, monitor it, and get on with life. Certainly.
That's really helpful.
And sorry, the second question, I got too engrossed in the first one there.
I think I'll come back to the second question actually, because I think the first one, I think because you've mentioned something about that, about the insurability, and obviously the insolvency side of things as well. My head is going into kind of like bonds and what are those? Can we kind of mitigate this risk? But yeah, getting on the risk register I think is really important. And I think larger corporates will probably have legal teams and in-house counsel to help understand and digest this. And I know when we've discussed it before, you've talked about actually let's not assume that all large organizations have got this sus, because a lot of them haven't. But a lot of the SMEs, which make up sort of 70% of our sector, are going to find this incredibly challenging. So it's definitely an area we kind of need to consider now. And I'm not aware of any kind of templates or structures for auditing and due diligence, but I think you've kind of said you need to keep an eye. You've got to find a way to kind of make it contractual, but there's no documented process.
Yeah, I don't think there's going to be a one size fits all solution to this. I think each individual sector is going to have to take its own approach, because as I say, I'm very easily and very early in the process of my considering what we at Neuven would do was to look at the nursing concession and go, okay, well straight away we can't have a solution for our clients that just uses umbrella parties that are umbrella companies that are accredited and where we have a degree of security, because that won't work where we're using a nursing concession. So what might work for a distributions and logistics business simply might not work for a healthcare business. And then even within that, there might be a different appetite for risk. Some may be relatively lightly exposed to the use of temporary labour and may say, well, we consume so little, it's something we can take on our risk register, mitigating it relatively lightly. Other companies may look at that and think, well, we really do have to have a very thorough understanding of that. I think it would be very foolish or a very aggressive position to not monitor it at all. But I can see companies that say we can lightly monitor this, and others who say we have to have a full understanding that all the tax has been paid. So yeah, I don't see that there's a templated solution out there. And I think the other thing that I would point out is even if you have awareness of what's going on now, this is going to be a very dynamic situation for a while. And I think that there'll be new products coming to market that don't exist yet, and new solutions coming to market, but also the market's going to change in response. We have something like 200 umbrella companies, I believe, at the moment. I've been talking to our own PSL, I've been talking to various other parties. We think the market probably needs no more than 12 or 15 umbrella companies to meet the needs of all employment agencies. That you just don't need that many more. But of course, we are choosing our own PSL, so are all the other big MSPs, so are all the other big neutral vendors. Without giving too much away, we're all picking pretty much the same 8 to 12 umbrella companies. And this links into what I was saying about insolvency being a problem. Well, what happens if the market just consolidates down and various companies don't have enough business? You kind of then force the insolvency problem. So I think for a period of at least 12 months, 18 months, we're going to need to be extra vigilant, because you need to think not only what am I doing in response, but what is everybody else doing, and what consequences might that have for my supply chain.
And we'll just maybe flip back to the second part of that question: is that employment businesses, how aware are they of these? From what you're hearing and who you're talking to, how aware are people?
Not very is the honest answer. But it's very variable, and I wish I could give some guidance that would allow you to kind of make some judgment calls. But there are some relatively small agencies who have quite a sophisticated understanding, and some very large ones who don't. What I would say is the aggregators, the neutral vendors and the master service providers, all seem to have or the big established players. There are one or two new entrants to the markets that don't seem to understand it, but the bigger providers do seem to. But the agencies themselves are very much a mixed bag. One or two have really, well, I'm still looking at them. One or two have quite sophisticated solutions to this problem. Some of them understand it's coming. Some of them, frankly, have no understanding of what you're even talking about when you raise the subject with them.
Thank you. And I think you again kind of covered this one, but in terms of care providers, should they be renegotiating their agency contracts? And if so, what are the kind of one or two things that they should really focus on to get right in those contracts to protect themselves as much as they can?
So it's difficult to answer that question generically, specifically. So I will keep it to a couple of generic points. Yes, this is a change that I think is profound enough that all consumers of temporary labour should revisit their contracts, and take a look and obtain specialist advice on it. I think we touched upon the ability to investigate the tax position of the agencies, so that you can check that the tax has been paid. I think the second thing I'd be looking at is a greater degree of control over the supply chain below the agency, not because it affects you, because it kind of occurred to me as you were talking earlier, that I think even if as a client you conclude that you're not at risk because there are further companies in the supply chain, you always need to be policing that that is true. I don't think there's any world in which I think an end client can step away from this and go, it's not my problem because I'm not a relevant party, because at the very least you need to know that you're not a relevant party. And then the third thing I would look at is around payment, which is, if it were me, I would be putting clauses in that says, if I am not satisfied that your tax has been paid, or if HMRC come to me for any of tax, I am entitled to withhold it from the sums that I pay you, and to settle with HMRC directly.
Brilliant. That's great suggestion. Thank you very much. I think you sort of covered the IR35 point, but we are hearing of self-employed care workers. There's a couple of models out there that are starting to offer services for direct care workers, self-employed care workers via portals, which are designed to kind of fill empty shifts or to fill in as bank staff or to work across multiple homes. And we need to kind of consider we don't create a tax liability, certainly within IR35. Have you got any sort of comments to make on those types of models that we've seen kind of coming up to the surface?
So I think just a couple of points to make. Certainly in discussions that I've been having, we have been talking about whether the consumers of temporary labour will take a look at this and kind of revisit their no personal service companies don't really want to deal with IR35 and say, well, actually, that between the devil and the deep blue sea, I will pick the personal service companies, and I will do the work that's necessary to run that effectively. I don't know, but it's clearly one way of mitigating it. I think the slight caveat that I would put to that is I don't cover it because it's kind of an obscure area within an obscure area. But the legislation does contain an anti-avoidance provision that says that if you are effectively creating a series of companies that meet the definition of a personal service company, and then just to avoid joint and several liability, and the sole purpose of doing that is to avoid joint and several liability, then that fails as well. So we were talking earlier about kind of where you might see litigation, and you do see kind of responses in the market that say, well, nothing's settled till there's a court case on it. In terms of what is an umbrella company, my personal view is that is nonsense. You can read, nobody will ever get involved, or it will be a super obscure case. If anybody's arguing about what an umbrella company is or isn't, you might as well just pile £10 notes in the car park and burn them as argue that one. You could see an argument where HMRC was saying that a personal service company structure is inherently only designed to avoid JSL, where it's not being paid tax, and you could see people getting caught. That's the area where I could see litigation applying. But you would be back in these kind of artificial structures that of course, the pain that leads to where we find ourselves now.
And the anti-avoidance part, it's where HMRC are looking to protect themselves. Look, that does conclude all our questions. I just want to say a huge thank you, Patrick, for presenting today. It's a complex area. It's challenging. I think there's a lot of providers probably don't understand the full liability that they might be incurring and the work they need to do. So we'll make sure we put some more materials out about this to help people understand. We'll be able to share the copy of the recording with them as well. And I'm sure we've got Ian's contact details we can share for people should they wish to reach out directly for further clarifications. But just a huge thank you today. Thank you everyone for joining, and thank you for some of the questions we had submitted before, during and afterwards in the chat. A huge thank you. We'll get a copy of the recording out by Friday with a copy of the slides, probably sooner, knowing my colleague Sonam, she's usually on top of this. And a huge thank you. Thank you very much. I don't know, Patrick and Ian, if you want to stay on, we can have a quick chat, but everyone else, thank you very much for joining today.
Thank you, Richard.
Thanks for attending, everyone.